Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Now in this video we are going to be diving into a topic that every trader must understand, and that is trading breakouts and fakeouts. Alright, how many times have you seen price break out of a key level, you know, and you jump in and suddenly, boom, the market reverses? Have you experienced such a thing before? The market reverses and stops you out. Well, you're not alone, because that is a fake out and it is designed to trap traders, right? For example, see something like this. You had a breakout, right? And before you know it, the breakout to this side, and before you know it, price just dropped back and came downwards. Okay, so if you've experienced such before, just know that it is a fake out, and we're going to be talking about how to navigate this in this video. Okay, by the end of this video you'll know how to spot real breakouts and avoid fake outs. All right, and how to execute smart trades. So hit that like button and subscribe to the channel if you have not done that already, and if you want more trading strategies like this. All right, so let's just get into it. Okay, now first things first, what is a breakout? A breakout happens when price moves beyond a key support or resistance. Okay, that is when you have a breakout. This could mean that buyers are stepping in if it is when price goes above a key resistance, or it could be that sellers are stepping in if price drops below a main support. All right, but here's the catch: not every breakout is legit, and that is where fake outs come in. All right, a fake out happens when price pretends to break a key level, luring traders in only to reverse and move in the opposite direction. Now this happens because big players, market makers, institutions, and smart money, they know that most retail traders jump in on the first breakout they see. So what do? They manipulate price. Okay, they push the market just beyond a key level to trigger stop losses and then trap traders. Then they drive the price back in the opposite direction, leaving retail traders stuck in bad trades. Sounds frustrating, right? But don't worry, I'm going to show you how to spot fake outs and avoid these traps. So how do you know if a breakout is real? Here are some key things to look for. The first is strong volume. All right, you can actually add the volumes indicator because of identifying strong volumes. All right, okay, let's just use this indicator instead. Let's use this indicator instead. All right, so a real breakout ought to have higher than usual trading volume. Okay, if price breaks a level without volume backing it up, then it's likely a fake out. Secondly, you should have a retest. All right, even if you happen to have a strong volume around the breakout, watch out for a retest. Okay, there should be a retest of the level. The best breakouts retest, retest the breakout level before price continues in the direction of the move. Okay, so ensure to watch out for a breakout. We can see what happened here. We had a breakout, we had a legit breakout. You can see there was even a spike in volume, and we had a retest. Can you see that? We had a retest before continuation in the direction of the trend. All right, now you can also watch out for momentum candles. If you see a large bullish candle or a large bearish candle, it can show strong conviction from traders. Weak breakouts with small candles are more likely to fail. Okay, and then watch out for multiple time frames, confirmation. Check your higher time frames, right? Check your higher time frames to see if the breakout aligns with larger trends. Okay, a breakout on the 15-minute chart means nothing if the 4-hour chart shows the opposite trend. All right, now let us talk about how to avoid getting trapped by fake outs. Okay, the first is, do not chase the first breakout. The market loves to trick impatient traders, so wait for a retest of the breakout level to confirm if the move is valid. Secondly, look for false signals. Okay, if price breaks if price breaks a level but immediately reverses within a few candles, that is a warning sign. All right, that is a warning sign. Thirdly, use your stop loss wisely. Instead of placing your stop loss right at the breakout, if you get a breakout, instead of placing your stop loss right at the breakout level, give it some breathing space, right? Placing stop loss too tight makes it easy for market makers to take you out. For example, if you had a breakout, instead of setting your stop loss very tight to the breakout point, give it some room, right? And then watch for divergence. You can actually use indicators such as the RSI or the MACD, or any other indicator of your choice, just to confirm, in terms of divergence, when price is making lower highs, for example, or lower lows, for example, and you notice the RSI making higher lows, it shows that bullish momentum is building up. I'm just trying to see if we can find an example real quick. Okay, so you should be watching out for divergence as well, because divergence is actually a good signal. Yeah, it's a good signal when you want to spot um legit reversals, right? If you want to spot legit reversals, divergence is a good signal. We've talked about divergence in previous videos, so you might want to check that out. I'm just trying to see if I can find an example real quick, but if I don't find one right now, we're just going to move on. Okay, but basically I'm just going to explain very briefly. If you have price making lower lows and you have the RSI making higher lows, then it shows that a bullish divergence is forming. Okay, and we could have a bullish reversal. On the other hand, if you have the price making higher highs and you have the RSI making lower highs, it could mean that a bearish reversal is about to happen, because that is what we call a bearish divergence. Okay, now that you know how to spot real breakouts and avoid fake outs, here's how to trade them effectively. The first is wait for confirmation. All right, be patient. Let the market confirm the breakout before jumping in. Okay, when you notice a breakout, do not just jump in real quick. Okay, for example, you can see this breakout that happened here. Wait for a retest. Watch out for candlestick patterns. Okay, before you enter the trade, and use your stop loss orders appropriately. Instead of market orders, you can stop orders, not stop loss orders. You can set your stop orders, above resistance for a buy stop, below support for a sell stop, okay, to catch the real move. But ensure that if you want to take that route, okay, ensure that the breakout is most likely to happen. But to be on the safer side, I would actually recommend that you wait for a retest and manually enter your trade. Okay, market execution. All right, that is after a retest has been has taken place and a confirmation candlestick pattern has occurred. Then have a clear target. Okay, do not just enter because price is moving. Set a profit target. All right, if you enter a sell, for example, after a breakout, set a profit target. You can use the support levels. Yeah, if it is a bullish breakout, you can use resistance levels for your take profits. Okay, you should actually have a clear target. And that is it, traders. Now you know how to trade breakouts like a pro and avoid fake outs that trap retail traders. If you found this video helpful, hit that like button and subscribe for more trading strategies. Also, drop a comment below. Have you ever been caught in a fake out? How did you handle it? Let us discuss in the comment section. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.